Making passive income from a property portfolio is how most Australians actually plan for retirement and is how they retire early. Usually, the higher barriers to entry means that most people can't get into property, and we've also been taught the wrong things, and there's a lack of research and accountability when it comes to buying the right types of properties in the right locations. In this video, I want to break down exactly how much I make from my real estate portfolio. It's an updated version from the video from last year, and that video got over 55,000 views. So I thought, why not give you guys an update and showcase what is possible by doing things a little bit differently compared to what we've been taught and what most people online tell you about. If you're interested, keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, cryptocurrency, and financial freedom. Now in this video, this is definitely not a flex. I have been requested by many people saying that,
hey look, I want to know what's in your portfolio. I want to know an updated version.
The last time I made this video was in like September 2020. And so I thought it would be fair to share some of the experiences I've had and what it actually takes to build a portfolio like this. Things are changing when it comes to interest rates. Things are changing when it comes to traditional finance, into cryptocurrency and decentralized finance. So it's important to understand what you can do, what you can't do. I've got a video on this channel specifically about all your upfront costs. So how much of a deposit you need. You can check that out here. And what you're going to find is that it's actually not as much as you think it is. And that comes down to where you're looking, how you're positioning yourself, and having the right strategy. I know that a lot of people online come out and say, well, you know, you need to buy in blue chip areas and buy in Sydney and Melbourne, and it doesn't matter if it's a house or a unit. I don't really subscribe to that. I think it comes down to more than that. It comes down to cash flow, capital growth, and the narrative behind that area. So I'm going to break down what I've been doing and how my portfolio looks like at the moment when it comes to passive income. And the biggest takeaway from this, right, straight from the outset, is don't get demotivated by seeing,
oh, well, Ravi did this by 29 or 28 and I can't do that myself.
No. It's not about comparing someone's day 100 to someone's day 1. So if you are starting, this is actually fantastic to watch because it's starting to motivate you to go, well,
hey, this is actually possible.
You know, you get so much negative news out there saying that,
oh, it's so hard to buy property. I can't get into the property market. Oh, I've got to get my family to help me, otherwise I'm screwed.
It doesn't take a lot to get started, but to stay consistent, to keep building on that wealth and compound that growth is very important. So let's see what we can actually do when we use real numbers. Now, how I've calculated everything is my income minus my expenses is my passive income. So the update from the last video, and I urge you to go watch it, it's like 6 minutes long. Go and watch that first and then come back here. And you can see that it's not just about
capital growth.
Because in these videos, I talk about the cash flow side. Capital growth wise has been amazing. Australia has grown in terms of properties and it's all been inflated. That's been fantastic. But some areas, and I know I've got family and friends that have investments in, you know, blue chip areas in Sydney that have actually had their rents drop. And I don't think they're going to return because there's so much supply coming into the market in those specific areas. Whereas over the last 12 months, my rents have actually increased and a lot more than I thought they would. I also will break down what my costs look like, but I'm also going to include interest repayments and principal repayments because some of my properties are I&P and some of them are interest only. So I'm going to break down both so you get a bit of a transparent image of what's actually happening and what you can do when it comes to passive income. Now keep in mind though, it's a major misconception that people think your principal repayments are an expense. They aren't. You just got to make them, and the way that I look at them is forced saving. So if you really thought about it, you're paying down the principal amount, which means if I sold the property today, that would be the amount that I would get back anyway. If you're looking at true passive income, it's your income minus your expenses, and expenses aren't considered when you're looking at repayments for your principal amount, but I'm going to include that anyway. So these numbers are done monthly and I'm going to break it down so that we look at it what the year end looks like as well. So if I go interest plus principal repayments right now, that would cost me $11,995 a month. And if I had that on interest only repayments, that would be $6,475. My rates, insurance, management fees, maintenance, etc. has averaged out to be about $4,800 a month. And that would mean that my total cost interest plus principal would be $16,795 a month, or if I was going interest only plus my other costs, that would be $11,725. My income, the rent I'm making from my properties at the moment, are $18,893 per month. And so if I was to look at what my passive income would look like based on interest plus principal repayments minus my net income, that would equal $2,098 per month, which would work out to be about $25,176 $66 a year. If I go interest minus my net income, that would be $7,168 a month, which works out to be $86,000 and $16 per year. These numbers do surprise me, but they also don't surprise me, because when I started 7-8 years ago investing in regional properties worth like $250,000, I really didn't understand the concept of growing wealth through property all that much. I didn't really have a strategy in the beginning. I got lucky in the start. But what happened after my first couple of purchases is that I started paying attention to things that work, and I really upgraded my understanding of property. Hence why I run a buyer's agency and we help people do that. But what I found was that if you invested in the right areas, you're not just looking for capital growth. You need the rental growth as well. Why? Because we're going to retire on rent. I want that number to keep increasing, because when I decide that I want to finish up work and whatever I'm doing, if that for you is a 9-to-5 job and you're like, I'm done, I want to just rely on my investments, well, I can make $86,000 as of today. Now, if I was to look at interest plus principal repayments, I could pay down my entire loan amount by, in 20 to 25 years, and I will be ending up with quite a bit that I can retire on with this amount of rent that comes in every month. A couple of key things to take away from this is definitely not a flex. There are people out there that have got way more properties than me, have done more things than I have. But the important thing is to know what your lane is, stay in that lane, and of course, know what your goals are. At the end of the day, my goals are different to yours, and yours will be different to someone else's. So it comes down to balance and happiness. I could run this buyer's agency on a whole nother level, hire like 5 or 6 people, and we could really grow this out to be really, really big. But I have no intentions for that. I think that I can bring more value at scale when it comes to these YouTube videos, which you can get for free, but I also can help a handful of people with direct contact on the buyer's agency front, which makes me a lot happier as well. Whereas if I start opening it up and become really a big company and whatnot, we have the demand there, but it comes down to how much risk and reward do I have for people that are coming on board? Because when the numbers become bigger, there's a higher chance that you're going to make more mistakes. So I'd rather keep it close knit, and I want to keep these guys for the next couple of years and really grow their wealth so that they can achieve financial freedom. I've said it on this channel before, is that once we hit our quota of clients, we are not taking any more. And the reason for that is exactly that. I want to take a handful of people, take them to financial freedom. And of course, I have other offerings, YouTube being one of them, but also the Patreon channel. That is a community that I'm really trying to bring as much value as I can with daily updates. And I think for anyone that's in there already is loving it, because I do get a lot of feedback. Now, things are changing when it comes to debt to income ratios, restrictions on lending, and house prices moving at the pace they are. It is going to mean that it's a lot harder to rely on just real estate to retire. I totally believe this, and is why I try and educate you guys about different asset classes. Now, I don't talk about ETFs on here. I've got a video about why I don't invest into ETFs, but for most people that can't get into property, that don't want to take on the volatility of cryptocurrency and don't understand collectibles and NFTs, then ETFs might be a good strategy. I don't talk about financial advice. I talk about what I do. And what I'm doing right now is I'm going heavy into real estate, build out the machine. Then I have cryptocurrency, which is adapting to the new version of investing and the new industry that's at play, where the gains are going to be far greater than what I get in real estate. And then I also have collectibles that sit in the background, because I understand pattern recognition and I understand how that could play a large part in growing my financial wealth and allows me to stay quite liquid. So if you have enjoyed this video, drop a thumbs up and share this with someone that thinks that, it's impossible to buy a home now. No, it's not. It's about going in to properties that you can afford in good locations, building up slowly, and what you can build up over time is going to be quite considerable and allows you to get financial freedom a lot earlier. If you have enjoyed this video, drop a like, and I'll catch you guys in the next one. Thanks, guys.